Good morning. You've tuned into ET Now. This is Buy Now, Sell Now with me, Karunya Rao and Varun Hiramat. Let's kick off the show by taking a look at the top market moves. But before that, let's quickly pull up the quiz question for the day. What we asked you is which NBFC trades at the highest price to book? L&T Finance, Shriram Transport Finance, Cholamandalam Investment or HDFC Limited. The answer will be unveiled at 11:45. So you still have time. You can log on to Twitter, go to our Twitter handle ET Now Live and post your answer in the comments section. Moving right on then, markets, well, as far as the benchmarks go, they're trading okay right now. Nifty is at 14,178, up about 32 points. Sensex also trading with slim gains at this point in time. 48,250 is where it's perched at. Broader markets, fantastic up move seen there. You have mid-cap index up more than 1%. Small cap is up 1.3% as we speak. Advance decline ratio clearly in favor of the advances. 30 names on the Nifty 50 index in the green, while 20 in the red. You have Nifty Auto looking very upbeat, up about 1.2%. Nifty Metals, fantastic up move. The way they're shining, 3.3% higher in trade. Nifty Realty has definitely gotten a boost after the development came by last evening for Maharashtra specific stamp duty. We'll get you the details later on the show. It's up 2.2%. Banking stocks also looking upbeat. But on the flip side, what's capping the upside on the markets today is a Nifty IT, which is down 1%. Nifty FMCG is also down about 0.5%, I'd say. As far as the mid-cap index is concerned, there's a Bharat Forge looking quite upbeat, 7% higher. Ashok Leyland is up 5%. They've got a bit of target upgrades coming in there from Nomura, as well as even UBS has come out with a positive note. Jindal Steel, Apollo Tyres, Adani, TVS Motors, Adani Enterprises rather, SAIL, Jubilant Food, Ibol Housing Finance, Ramco Cements, LIC Housing. These are essentially the names from the mid-cap index which are really standing out. From the small cap, there's IDFC, Indiabulls Real Estate, Rain Industries, Hindustan Copper, Bombay Dyeing, Dixon Technologies, the names which are really outperforming in trade. Varun, why don't you tell us what's on the cloud today?
Yeah, sure, Karanya. I'll be happy to do that. Different stocks today in the cloud because there's some sectors which we haven't really spoken about. So while it comes up on your screens, let's begin. We have Sunteck Realty today, Oberoi Realty and Godrej Properties. These are three Mumbai-focused realtors. Let's remember there's been a waiver of certain taxes that were associated for builders, and that's going to bring the cost down significantly for everyone. So these three counters in focus. Then you have PNC Infra. The infra space is also picking up. You have Access MF, Nippon India MF, BNP Paribas and Fidelity buying shares. We then have a Dixon Tech, which has entered into an agreement with Imagine Market Private for manufacturing certain products. We have Ramco Systems, which is to implement its aviation software for construction helicopters. Soba Developers posting very good sales growth, up 27% Q-on-Q. Sales value up 29% Q-o-Q. Price realization is the highest in 6 quarters. We then have Bandhan Bank posting a very strong Q3 update, which we'll talk about later, but advances and deposits both growing in excess of 20%. We then have Ashok Leyland with Nomura raising a target to 134, seeing stronger MHCV recovery. And then we have... That's it. That's the cloud for this morning, actually. So keep your eye out on those counters. They all are already active in trade, but should see decent price action and volume today. Again, like we were saying earlier on today in the show, there's a lot happening in the real estate sector. And basically what's happened is post the stamp duty cuts, which have already led to record sales in Maharashtra in the month of December for properties, there are registration fees associated as well, right, that affect builders and consumers. Now, the Maharashtra government has approved a 50% reduction in the premium for these projects. So basically what's happening is for a typical developer, this registration cost plus state taxes come to anywhere between 15 to 20% of the total project cost. Now, if that goes down by 50%, not only do the builders benefit, but us consumers as well, assuming that that is passed on to us. So obviously, Obviously, it will vary on a builder-to-builder basis, on a project-to-project basis as well. But the key point of this is your builders now have room of 50% extra margin, which they were paying as state taxes and registration fees to the government that can be passed on as a benefit to you. So let's see, this might result in further sales for the realty sector. It will also make a lot of projects viable for builders which have been stuck for a very long time due to costs, right? So now a lot of projects may turn viable. So in light of this development, all of this morning we were catching up with the heads of various real estate stakeholders, and this special bite from Niranjan Hiranandani and Credai's Boman Irani tells us the windfall for realtors and home buyers that this could generate. Let's listen in.
The premiums were so high that the lowest cost of any building which was sold based on these premiums which were being charged was 10,000 rupees a square foot for the lowest cost of any project in the whole of Mumbai city and suburbs. So the extortionate amount of premiums were actually being paid by the buyers. So whatever is happening is definitely there. And that's why we are grateful to Mr. Uddhav Thackeray, the entire government, the entire machinery, the joint venture partnership of the polity to agree not only to do the stamp duty cut, which has been by 3% up to 31st December and 2% up to 31st March, but also to add on this issue of premium. We've been asking for that for a long period of time, and hence I'm glad that it has come. Hopefully, the real estate industry, which has been going through a horrible time and a horrible mess, as you are aware, and you've mentioned it several times on your show, and we've talked about it, will get some relief and be able to bolster back and get back to action.
Last year, same time, we had about 8,44,000 registrations that took place in this quarter. This year, it's about 12.56 lakh registrations that took place. Your collections have gone up by almost 370 crores. The exact number is 367 something. In spite of a reduction in the amount of stamp duty or in the percentage of stamp duty charge. I think just this stamp duty reduction has given such a boost in the arm to all our home buyers that this makes it probably the best time for home buying in Maharashtra.
All right, moving on, let's bring on board Kunal Bothra and Ashish Maheshwari to talk technicals and fundamentals of the market and eventually address our viewer queries as well. Morning, Kunal. What are the high and low risk ideas you have for our viewers?
Yeah, good morning, Karunya. So I'm expecting that the market mood would remain positive. There has been this tendency that the markets are ebbing off from their day's high. So that's the only bit of intraday volatility which probably a short-term trader should probably get accustomed towards. But I think if a short-term trader can digest in this kind of intraday volatility and still maintain the long stance, there are a lot of stocks in the offing. I would suggest a couple of buy calls over here at current levels. The first one is about Agrotech Foods, the stock. Coming back towards a strong support zone, we classically look out for stocks which come back to their mean reversion points where they take support, retrace some of the gains and then come back to a strong demand zone. I think Agrotech Foods is coming back into that kind of a territory. Would suggest a buy on the stock at current levels for a target of almost 50 to 60 rupees on the upside. So 900, 920 could be a potential target range and stop loss could be kept at approximately 825. The second stock which I'm suggesting as a buy is about Eicher Motors. Again, an interesting chart in the making. Auto stocks overall have shown very gradual movement on the upside. So it's not been like, the ITs and the pharmas and the metal stocks where these stocks have just about gone through, strong returns. But I believe that this gradual, move which you're seeing in Eicher Motors from, 2,400 just about a couple of weeks back to now above 2,600 levels, I think is a sign that there's a new trend in the making for this stock. So would suggest about Eicher Motors in the anticipation of a bigger breakout at current levels, targets of 2,800 and stop loss could be kept at 2645.
Okay. Ashish, how about you? What are your top bets for the long haul?
Yes, my first idea as far as high risk is concerned is Polycab Cable. In my view, this stock is still going much cheaper compared to the peer sets like Havells and Crompton, Besides this, in this particular quarter, we are going to see a boom in performance of all FMEG companies. And being a dominant player here, we are going to see even 250 crore kind of profitability, which is going to be one of the highest ever profit, which can be reported by Polycab in this particular quarter. And besides this, also their wire and FMCG, both businesses are doing pretty well. I'm expecting the CAGR of approximately 25% will continue for next 3 years in FMEG and around 15% in wire segment. So this is a blue chip in making, in my view, and my target for this stock for next 6 months is 1500 plus only. As far as low risk idea is concerned, I like to go with an auto ancillary company called JBM Auto. This is a company which is gradually has touched 52-week high, but in my view, it's again a long way to go from here because they are into EV mobility now. So they are having an order book of approximately 700 buses, and out of that, 350 buses are into electrical vehicles buses. Besides this, the tooling business is also has picked up. So in my view, if I look at the valuation wise, it is still available at 10 price earning multiple from FY23 earnings. And as now they are migrating from auto ancillary to direct bus manufacturing company, so their valuation deserve more premium. So my 6 month target for this stock will be conservative side 400 rupees.
Okay, thanks for that, Ashish. Time for a quick break here and buy now, sell now. Stay tuned. We'll be back in just a minute. Hi, welcome back to Buy Now, Sell Now here on ET Now. Let's begin the query section of our show. The first one is quite interesting, actually very short term. Someone's bought AstraZeneca stock here 2 days ago and they'd like to know why it's falling and would like to know if they can continue to hold for a year or more. This is Vishal V of Mumbai. Kunal, coming to you first, AstraZeneca on the charts, any insights to offer?
I think the stock should be held on from a longer term view. We've seen many of these pharma stocks, and especially for AstraZeneca, it's not a stock which has given strong trading wise returns, but it's given you very strong returns for someone who's been holding on to these stocks from a longer term perspective. And by that I mean at least for a 4 to 5 years kind of a trend. So I think if that's the case, then I believe holding on to AstraZeneca could be a good bet. The stock is also coming back to its 50-day moving average. So, typically we see again that this mean reversion process gets completed. There's just one trend which is, emerging for AstraZeneca stock price is that the price volumes or the volumes for the prices have increased, significantly in the last 1 week. So in the last leg of rise, as well as in the current leg of the fall as well, from 4,300 to 4,600, 700, and from 4,700 to back towards 4,400. In this span, the volumes have risen quite strongly for AstraZeneca. So it typically means that there are a new set of buyers or players who have entered into the stock at these levels. So I would suggest that if you have a longer term horizon, then you can look to hold the stock even at current levels.
Okay, thanks for that. And what about fundamentally, Ashish? Is there a strong connection, firstly, or correlation between what's going to happen with AstraZeneca Global and here? And otherwise, what are the prospects for this company?
See, in my view, if we see last 1 year, the stock has given almost 250% kind of returns already. So those investors who have bought early, they have bought on some grapevine, and now news is confirmed, so they are exiting. So there's the reason we have seen almost 600 rupees correction from the peak in AstraZeneca. And though pharma sector is comparatively doing well, but this stock is falling. So my advice will be to exit from this stock, because first of all, now in India, they'll try to push more their indigenous developed vaccine as far as COVID is concerned. So neither AstraZeneca nor Pfizer will get that opportunity what Indian manufacturers of vaccines will get. So this is something like what market is realizing. And if we see profitability and valuation-wise also, stock is still very cheap, very expensive because the valuation is almost 135 price earning multiple. So my view is to exit from this stock and look at, if we want to remain in pharma field, look at Sun or Dr. Reddy, which can give you better earning opportunity, as I'm expecting very good quarterly numbers from both of them.
Let's move right on then to query number 2. It's for from Sai Krishna Unnava. He tweeted to us. He wants our experts' advice on technical as well as fundamentals of Karur Vysya Bank. The stock really has seen a good run up in the recent past. I'd say, the last 2 months or from 35 rupees odd levels, right now trading at 48 approximately. Kunal, your view on Karur Vysya, and is there more legs to this up move?
Karnya, because the stock has confirmed breakout on many technical parameters, and these are not short term; these are pretty long term parameters. So one of them, and the foremost one, is what we call it as a price breakout. So if you look at the 2017-18 high for Karur Vysya Bank, I think if I'm not wrong, it was at 135, 140 range for the stock. From there, from 2017 to almost 2020 end, or 20 mid, the stock was into a 3 or 4 year downtrend. And now when the stock has rallied back from 20 levels to 46, 47, where it's currently trading, it's broken that pattern of lower highs and lower lows. So for the first time in the last 3.5 or 4 years, there has been a very strong confirmation of a breakout. And then when you look at the indicators, especially the RSIs, the volumes, they have shaped up extremely well for this stock. So I think on the longer term parameters specifically, there is a strong signal that a new trend could be emerging. But there's just one catch over here, that many of these banking names, they would tend to perform when the environment for the overall bank Nifty remains buoyant. And in such a kind of a market, you might have those odd phases of corrections as well. So if you can just digest that short-term bit of volatility, and if you believe that the what the indicators and prices are showing as a breakout, if that sustains from a longer-term duration, there should be a stronger period of revival for Karur Vysya Bank. So it's a good stock to invest, but just ensure that there could be some volatility on the way or along the way, and if you can try and digest that kind of a volatility, then I think it's a good stock to hold on to.
Okay. What is your sense on this, Ashish? Karur Vysya Bank, the fundamentals and the prospects for future growth?
Fundamentals are gradually improving now of this particular bank. We have seen good recovery in terms of gross NPA and net NPA, good improvement by the bank in the last quarter. And in my view, once the valuations of your Axis, ICICI, IndusInd, etc. will be expensive, then the turn will come of these smaller private sector banks also. So my advice will be to remain invested in this particular bank, and in fact new positions can be also taken at this price because still almost 30% away from 52-week high. So scope is there for appreciation from here, because once performance for this quarter will come, I'm sure it will see 55 to 57 marks soon.
Okay, great, Ashish. Thanks for that. So that's the view on a Karur Vysya Bank. Let's move on. Prakash Industries in focus. Shyam Agarwal, he's been holding this company since 2017 and would now like to know if he should hold or sell. Kunal, coming to you first. Prakash Industries, what's your advice?
Well, I would suggest an exit into the stock. So even though the stock has gone through a severe phase of correction, like many of these mid caps have done from 2017-18 highs, there are two ways to look at whether there's the sharp correction which has happened to the stock price, or look at the last 9 months, 10 months of recovery into the prices, and then try and assess that whether the stock has the firepower to restart a long-term uptrend. At least on the last 9 month, 10 months chart, it seems like the stock would probably go through more of a struggling phase rather than more of a big revival phase. So I would suggest that you can the viewer can exit the stock over here. If you're looking out for some other avenues for investments, I would still suggest that something from the IT pack is something which you can probably hold from a longer term view. And Wipro has been one of the stocks which I've been highlighting time and again. I still believe that at current levels, and I think especially on dips of 10%, 15% odd, if that happens along the way, then I believe Wipro could be a good long-term bet.
Okay, thanks for that, Kunal. Ashish, how about you? Fundamentally, Prakash Industries, does it look attractive?
Actually, I'm very bullish as far as metal stocks are concerned, and I'm bullish for almost last quarter. And we have seen good rally in all metal stocks. And again, in this particular quarter also, all metal companies are going to come out with a bumper set of numbers. So my advice will be to remain invested in Prakash Industries at this point of time, because there's again a company which is into entire value chain from mining of coal to sponge iron to finished products and power also. So in my view, you can remain invested and take benefit of this rally in the metal stocks. My price target for Prakash Industries is 75 rupees in next 3 months. So and there's nothing to lose from here, because a good set of numbers is going to be coming soon.
Okay, great. So fairly optimistic on the earnings that are right around the corner, and Prakash Industries looks good on that front. Let's switch gears towards the realty sector. We have a query from Aditya Prasad of Mumbai, and he wants to look at the Mumbai-focused realtors. So this would be Godrej Properties, Sunteck, Kolte Patil. Obviously not companies like Soba, which don't really have a strong focus here. So Kunal, coming to you first, big day for the realty stocks, particularly for those that are focused in Maharashtra, but we do have a couple pretty prominent players who are focused in this region. So what do you think? Even the Oberoi Realty he's mentioned over here. Any of these charts looking particularly exciting?
It's very interesting, Varun, because real estate stocks typically have very, very high beta. And real estate stocks, they tend to move into strong phases of uptrend, and they're met with stronger bouts of volatility as well. But when you have surprisingly some of the stocks which are not showing any kind of volatility, but they are still showing signs of strong uptrend, even in a pack or in a sector like real estate, I think these are the stocks to watch out for. Few of the names which stand out on the charts in the same category which I've highlighted, Godrej Properties, of course, is one of them. The stock looks extremely strong. On the longer term charts, we've seen a very steady uptrend. This is what I'm saying. We've seen a very steady uptrend rather than more of a vicious uptrend into a stock like Godrej Properties. Oberoi Realty as well has done exceptionally well. There is some signs of life coming back into the mid-cap real estate stocks like the Kolte Patil, etc. as well. So I think if you can probably have some bit of more beta towards your portfolio, you can take that additional bit of risk. You may venture into these names as well. But I think even if you stick with the large cap names like Godrej Properties, etc., I think then that itself could be a good proposition. So it's a good sector to invest into, especially looking at the solidity of the large cap names.
Okay. Ashish, how about you? Clearly we all have now understood that this is a big trigger for Maharashtra-focused realtors, but would you stick with the larger prominent names, or could you even perhaps look at some of the smaller, typically perceived as a little more risky names also?
No, I like to remain with the leaders here as such, because in reality sector, it's better to remain with the leaders where the leverage is low as well as the sales velocity is high. So my bet is again going to be Oberoi Realty as well as Godrej Properties. Both are going to be my bet. And again, the rationales are whatever the government is taking steps, and there's not one or two steps. Government will keep on coming out more and more soft for realty sector, because first of all, they gain a lot in terms of bulk revenue, in terms of stamp duty and registration, what they are. At the same time, you use steel, cement, and various, you get a lot of GST also. So it makes a lot of sense to for governments to keep on coming out with more and more stocks here. Again, in this budget, I am expecting something will come for housing finance companies in terms of some subvention plan, etc., which will be again a positive trigger for realty companies. So my advice will be to remain with Oberoi Realty. My target will be around 800. And again, Godrej Properties, they are a prominent player in Maharashtra as well as in other part of country also, and very less leverage. So another 250 to 300 rupees upside I am also sensing soon in Oberoi Realty. So be with these two leaders.
Okay, great. So quite clear-cut advice from both our experts. Stick with the leaders, and Ashish is particularly positive on Oberoi Realty within that. Let's move forward then. Sudhir Mehta of Pune has bought Route Mobile at $1,000 a share. Sorry, $1,100 a share, and he's now thinking about booking out. Kunal, on the chart, I mean, we've seen some big buying, I think in Route yesterday, and fundamentally also there seems to be those acquisitions and things which are still pending. What's your call here? Can one stay invested?
Even though Varun, that the chart history is limited, but whenever I've looked at the charts for Route Mobile and in the last 2 months specifically, there has been a strong positive indication towards the chart. Now it's very rare to see that a recently listed IPO is not met by significant amount of volatility. Volatility is generally the norm for the first couple of months for these stocks, and when you see some heightened bouts of volatility, there are signals that the stock goes through whipsaw kind of moves where it breaks the previous swing highs and as well as breaks the previous swing lows as well occasionally. But we've not seen that phenomena for Route Mobile. In fact, even though in those bouts of volatility, the stock has maintained its previous swing lows, and in every phase of a rally, which has happened for the stock in last 2 months, it's not just made a new high for itself, but it's also protected the previous low. So these are very typical characteristics towards the stock price. It indicates that the stock is in a trending mode, and whenever we see stocks in a trending mode, it's more prudent to try and buy the stocks in a consolidation phase when they are going through that range action before they get ready for a breakout again. Route Mobile, I think at current levels of 1200 is in that kind of a phase where it's consolidating. So short-term charts very attractive. The price behavior is also very attractive, and I think the at current levels of 1200, it also poses a good risk reward as well to enter at current levels.
Okay, so that's really interesting. In fact, according to Kunal, it's the perfect time to get in because it seems to be consolidating and it tends to protect its previous low and make a new high for itself. So that's technically. Fundamentally, Ashish, Route is a very expensive stock, but it also offers high growth prospects. What's your read on this one?
Yes, this is an expensive stock, no doubt, but this is again a unicorn kind of play where you are not having any comparable peer-to-peer comparison with Root as such. Again, if we see the valuation of the peer set which are listed in US market, which are offering such similar services, still Root is a cheaper play because the competitors are quoting almost $10 billion plus valuation where you are getting this in $1 billion. Again, Root is doing something unique in terms of CPaaS services, which is again need of R. And if I see the shareholding pattern, also marquee names like Government of Singapore to Goldman Sachs to Avacus, etc. are now their major shareholders, and they are still holding and buying this stock at this price. So my suggestion will be also to add Route Mobile at this point of time, and price target of 1500 is also possible in next 6 months here.
Okay, so both are experts quite optimistic on that one. Let's now move forward to our last query for today on the auto ancillary sector. And given that autos are turning around, Rohan Shah of Mumbai has written to us. He wants to invest in a small cap auto ancillary player. So, Kunal, I know technical insights are usually limited to at least someone who's of a decent size, but are there any companies that come to mind?
This, which come into mind, but then again, difficult to categorize, your trading part of the, query from a low market size kind of a stock. But then I think there are many stocks, as I said, in this category. So I think first and the prominent ones which gets highlighted is the tire stocks or the the auto pack auto ank pack from that regards. You've seen very good pickup in Apollo Tires. MRF has also done pretty well for itself. Balkrishna Industries has been exceptionally well. So that's one pocket to look at. I think you can look at maybe Balkrishna Industries because it's more sturdy and strong. If you look at the other auto ank stocks, and I think Motherson Sumi is something which you can which looks very attractive. So it's again moving into the typical fashions of strong price uptrends, lesser bouts of volatility, more consolidations. So these are strong signals that the stock is maturing into a trending kind of a mode rather than a high beta, a high volatile trading kind of a stock. So I think that's the kind of a positive signal which you would want to venture out into stocks. So bullish on auto pack overall. And I think from the auto angle space, you can look at maybe Balkrishna Industries or Motherson Sumi.
Okay, Ashish, how about you? Any preferred auto ancillary players?
One pick which I have shared in my today's show, JVM Auto is going to be my number one pick here. I'm expecting decent upside from current valuation here. And along with this, we can look at Jamna Auto and Minda Industries also in small cap auto ancillary, which are again market leader in whatever the segment they operate. So they also have good potential to grow from here.
Okay, on that note, a big thank you to both you gentlemen for joining us today. Great to get perspective on these queries from you. It's almost time for a break here on Buy Now, Sell Now. But a lot of people have been writing to us, and we just want you to know that the preferred medium to do that is, of course, on our Twitter handle and our email, and especially for your BNSN queries, of which we've been getting a lot. Please go onto the ET Now handle and the Buy Now, Sell Now handle and address your concerns there. Time for a quick break on Buy Now, Sell Now. We'll be back in just a minute. Hi, welcome back to Buy Now, Sell Now. You're watching ET Now. My colleague Jayesh has been standing by, and he has various insights that he brings to us every day. And today he's dissecting some of the most outlandish targets on the street by analysts. Let's go across to him.
Let's have a look at the stocks which are trading, further away from their highest or lowest target prices. Starting off with the Nifty 500 stocks, where the return potential is the highest if you consider the highest target prices. Starting off with Yes Bank, the highest target price is at 72 rupees, which means that from the current market price, the analyst expects a 4 times return from this particular price. BHEL and Bank of Baroda from the PSU space, once again analysts are expecting more than double return from these two counters as per the highest target prices. And then you have Heritage Foods along with DB Corp, once again more than 100% return expected as per the highest target price. Now looking at the Nifty 500 stocks which are trading significantly away from their lowest target prices, if you have a look at Vodafone Idea, the current market price is at 12 rupees and the lowest target price any analyst has on the street is just rupee 1, which implies a 92% downside from the current market price as well. Similarly, you have Bandhan Bank, that is, the target price is 72% away from the current market price, while you have Dixon Tech along with Yes Bank featuring in this list once again, more than 65% downside possibility as per the lowest target price. And then lastly, you have India Mart Intermesh, which also is trading about 66% above the lowest target price that analysts have on the street. But that said, which are the stocks where there is a lot of confusion amongst the analyst community itself because of the wide spectrum of the target prices that we have. So if you have a look at some of these stocks, you have Yes Bank, where the difference between the highest and the lowest target price is more than 350%. Similarly, for BHEL and Bank of Baroda, you have more than 200% difference between the highest and lowest target price. And then you have SAIL along with JSPL, which also has a difference of nearly 150%.
All right, thanks for that, Jayesh. Some really outlandish valuations right now in the market across the board in various sectors. But let's switch gears towards banking, and we've had another banking update come in for Q3, Bandhan Bank. Let's remember we've had a host of financials reporting these numbers: Bajaj Finance, Federal Bank, IndusInd Bank, HDFC Bank, HDFC Limited. Now today Bandhan Bank has actually given the highest percentage growth out of all the names I just mentioned. Advances have grown 23% YOY. Deposits have grown 30% YOY. CASA deposits have grown 62% YOY. And your retail share as a percentage of total deposit had also gone up to 81% versus being in mid-70s earlier on. And the CASA ratio has also improved 500 bips Q on Q to 43 and around 900 bips YOY from 34 to 43. So advances stand at 80,000, deposits stand at around 71,000 and CASA deposits stand at 30,000. So really encouraging update for them, and I believe the street is receiving these numbers quite well. So that was an update for you on what's happening at Bandhan. That counter was quite active early on this morning. But switching gears yet again to different sector and spectrum. Bidding for the 6th round of spectrum auction for radio waves worth rupees 3.92 lakh crore will start from the 1st of March. The DOT has fixed January 12th for the pre-bid conference and last date for seeking clarification to the notice on January 28th. My colleague Priyanka joins in with more.
Well, yes, the government has announced a fresh round of spectrum auctions, but this will be for the 4G spectrum and not for 5G. The spectrum auctions are set to begin on the 1st of March, and the notification by the Department of Telecommunications has said that 5th of February is the last day for telcos to apply for the spectrum auction. They've also given the details of which are the bands which are going to be auctioned. It includes 700 megahertz, 800 megahertz, 900 megahertz bands, and also 1800, 2100, 2300 and 2500 megahertz band. But the main issue here is that there is unlikely to be a lot of bidding happening because most of the telcos have a lot of spectrum in the 4G area. There is enough spectrum available. And of course, the other concern is also the financial situation of the telcos, but mainly because of enough spectrum availability. Although, what could really help is the spectrum bands which are up for renewal for certain telcos. There could be certain demand there could be certain buying there. But beyond that, experts also believe and analysts also believe that there's not likely to be heavy bidding, although the amount of spectrum that is being put up for sale amounts to 3.92 lakh crore. But we'll have to see how much the government gets from this round of spectrum auction.
Well, one stock that has been in focus is Dixon Technologies, and it is yet again today rallying. There's been a major development at that counter. There could be some synergies coming up from a recent deal that's been concluded. My colleague Vinny now joins in with more.
Opportunity that they've bestowed on us. We get into a new domain of earwear. So we start with TWS. We start with the first manufacturing assignment in the current quarter itself. The numbers and the contours of the manufacturing are still being worked out. So I'm not in a position to share the exact numbers, but we are excited about this new journey for us because we feel that it's emerging as an iconic brand. And we've committed all the resources, whether financial, human, or on technology side for both. So we feel it's going to be a strong relationship because this is an opportunity for us to back an emerging brand, not only for India, but for a global market.
Okay. That was actually the MD at Dixon Tech talking about the latest deal with Boat and what that's likely to do to the revenues going forward. It's 11:49. We have the quiz answer and champions to declare. So just to reiterate for you all, the question was which of the NBFCs mentioned trade at the highest price to book valuation? Your options were L&T Finance, Shriram Transport Finance, Cholamandalam Investment and HDFC Limited. The answer is Cholamandalam Finance with the highest price to book valuation. Unfortunately, no one got that right today. It seems that everyone might have thought HDFC Limited was the most expensive. But keep tweeting to us and keep participating. And if you are ever one of the people to get it right, we'll feature your name on our channel at 11:45. Quiz question for the day. We now also have an important chunk that we like to bring to your attention on India's current position on vaccination, right? And of course, we're all gearing up for the vaccination drive to combat COVID once and for all. We've been catching up with a special set of guests discussing this topic, stakeholders in the vaccination drive, Vilemaker Borosil, syringe maker Hindustan Syringes, and Dr. Velumani of Thyrocare for their expert perspective. Let's listen in.
About what vials is basically a primary packaging for any pharmaceutical drugs, So what we do is tubular glass vials. As you see in the market, most of the vaccines right now being tested are in tubular glass vials. So basically these are made out of tubing. And as you rightly put, the vials require rubber stoppers as accessories along with aluminum seals. So speaking about importance, I would say most of these vaccines would not make to the, will not have a life even up to 12 hours or 24 hours. So it is the glass vial which will basically preserve the, let it be drug or vaccine in this case, and be an important part of the drug delivery system from the, let's say, pharmaceutical companies up to the needy patients, So I would say it plays a very, very pivotal role in the entire drug delivery system. Coming back to the availability of vials, I think let's speak of Borosil class pack. I think we are adequately we adequately have installed capacity of over 280 million. Currently, all the customers that we are working with in the vial project have been assured about the required supplies. Some of the companies have shared their forecast with us. And we think we are adequate. We have adequate supplies or installed capacity to cater to the pharmaceutical requirement.
Okay, that was of course on the vaccine, but my colleague Utkarsh also has an interesting conversation that he had recently with members of the BMC. Let's listen in.
We have enrolled more than 125,000 healthcare workers, and that data is already ready. So as and when we receive vaccine, those will be administered to those persons. In the second in command are the frontline workers. So more than 2 lakh frontline workers, the data updation is already on, and in a 2 or 3 days then that would also be ready. The third target group is the person having more than 50 years, age more than 50 years, and plus comorbidity. So this is in the target number 3. So all our plan is ready. Once we receive vaccine from Government of India or Government of Maharashtra, then within 24 hours, we would be able to start our actual vaccination program, and everything is set, including the dry run as well.
What is your expectation? By when can we really start this process? By when can we expect the vaccines to really come in?
As of now, there are no indications as such, but I mean, we are expecting the next week the vaccine will be delivered, and by next week, from the second day of the delivery, we can start actual vaccination process to the healthcare workers.
How many vaccines do you think we in Mumbai will be needing in the first batch? How many have you ordered?
Yeah, because I mean the order, as I said, I mean the vaccine is to be provided based on the data enrolled on the CoWIN app, which has been developed by Government of India. In the first phase, we have enrolled close to 125,000 persons, so we are expecting the equal number of vaccine, and plus it would be in 2 doses. Difference of the first dose and second dose would be 21 days or 28 days, depending on the vaccine we will be getting. So, yeah. So, I mean, to start with, 125,000 doses would be required, and we are expecting the same quantity from Government of India.
So, initially, you're talking about 125,000. Then we will be going to the other batch, where you said, which are the frontline workers. The data will be there in the next 2 to 3 days, and then we will go to the person who is 50 plus of age or having comorbidity. By when do you think this whole process of finally vaccinating the whole city of Mumbai will be completed? So how long is that process?
It depends on how much vaccine are we getting. If we get the enough quantity, then definitely in 4 months' time, the entire city of Mumbai would be covered.
Okay, completely out of time here on Buy Now, Sell Now. Thanks for watching. Keep it with ET now.